this is the type of stuff that can cause another global financial crisis. And if it does, the people that don't have gold and silver are the ones that are going to get hurt. And the people that do have gold and silver are going to be benefiting tremendously. Hey, it's Mike and Alan again with the Gold Silver Show. Alan, how are you doing?
Great, Mike. Yeah, I mean, the U.S. has implemented a 39% tariff on everything coming out of Switzerland. That has affected gold, and that has affected the price of gold. So in this video, I want to basically tell what that story is, look at prices, and see what do we think is going to happen next based on the dynamics of the market. So here's some of the news. Trump places tariffs on 1 kilogram and 100-ounce gold bars. This decision could upend the global bullion market. Whew. All right. What are your initial impressions, Mike?
My initial impressions are that this could end up upending a lot more than that. He's perturbating the global economy, perturbing it into a series of giant bubbles. To me, this could all end up worse than the Great Depression. There is that, there's a bell curve of probabilities. Maybe it won't happen. But the world economy is actually in a very delicate state right now, especially the bubbles in the US. And to wake up in the morning and the tariffs are this amount. The next morning, they're that amount. The next morning, it's where did all this come from? And where is Congress? That's what I want to know. Where is Congress? They are supposed to be doing this. It was Roosevelt that started all of these executive orders. Really took advantage of it. But this is like a whole new level. The stuff that the president is doing now, and it doesn't seem to be. The impression that I get is that these things are on a whim. This is very, very dangerous. So go on with the presentation. But
yes.
This can affect, if it affects the commodities exchanges, that's one thing. If it affects the banking system, because, we're talking about gold being a tier 1 asset as a reserve. So go ahead. Yeah.
Exactly. One other thing I'll mention here is that 1 kilo bars are the most common form traded on COMEX. So this is definitely popular. So there's definitely going to have some big effects here. So moving right along, how has the price of gold reacted? Well, gold prices officially surge above $3,500 an ounce and enter record high territory. This puts gold prices up 43% over the last 12 months. More than doubling the S&P 500's return. So look at this, just absolutely vertical on this news.
Yeah. It's, right. Now, those are futures, so that's not the spot price. But this was, did you say this was for December?
I didn't say, but it is for December, yes.
Oh, okay.
It is. These are December futures. So I do have another chart of that in just a second. So someone on Twitter, Lelena, asked Grok, can you explain what happened? And I thought this was a nice summary, so I decided to include it. The U.S. imposed tariffs on imports of 1 kilo gold bars and 100-ounce bars from Switzerland. That's the world's top refining hub via Customs Border Protection, CBP. This disrupts global bullion trade flows, okay? Super disruptive. It spikes gold futures, okay? Price spikes, we just saw that. And it could force closures of short EFP positions, exchange for physical, raising funding costs and dehypothecating collateral under Basel III rules. It's seen as a strategic blow to shadow banking leverage. Okay, so a lot of things going on, a lot of effects. It basically affects everything because everything's all interconnected, and it's not pretty. It's not good for anybody.
The one thing I want to point out is that it's seen as a strategic blow to shadow banking leverage. This is the kind of stuff that happened with collateralized debt obligations, and this is what triggered the global financial crisis back in 2008, the leverage that's in the system. And so perturbing the global economy with all of these, every morning the tariffs seem to be different. And countries are scrambling, trying to figure out how they're going to continue how their economies are going to be able to continue with these tariffs or without them, with us as a buyer. This is really doing something to and this could be a trigger because it's so monetary. Now we're talking about stuff that's traded on the commodities exchange, and we're talking about a central bank tier 1 asset. So let's move on.
Yeah,
excellent.
Exactly. So again, December futures, you can see that the price spiked. I think this was maybe 6 p.m. or something Thursday night, and has since come down a little bit, but the high was 35.34.10. 35.34.10. So that was that high there. And we also have a monthly chart where you can see the price spike compared to what's been going on the last 30 days. Again, 35.34.10. So record high.
So was that with the announcement from the what was the acronym for the
CBP?
CBP.
Yeah, this is the CBP Clarity. Yes, exactly.
Okay. So they said something and gold spiked. Okay.
Yeah, they said we are definitely applying that tariff to the 2 size gold bars coming out of Switzerland. Whereas for the past week, it was a little bit unclear. So I'll present that timeline in just a second.
Okay.
But one of the questions here is, well, how important is the gold coming out of Switzerland? Are they a major importer to the U.S. or not so much? And if you look at the most recent data from May of 2025, you can see that Switzerland imported almost 1 ton out of roughly 12 tons to the U.S. So
the U.S. imported that much from Switzerland.
Yeah, sorry. Of the U.S. gold imports of 12 tons, about 1 ton comes from Switzerland. So that's maybe 8%, which doesn't sound like that much for that particular month. However, if you look at every month for the last 25 months, as I did, and I put this chart together, you see it looks like this. So May, most recently, not a big deal. That's what we just looked at. But earlier this year, December, January, February, March, huge inflows. And on balance, all the gold from Switzerland, all the red here, accounts for 46% of the gold that the United States imported. It came from Switzerland. And the rest of only 54%. So this is almost half the gold that the U.S. is getting.
Well, we've been we were covering December, January, February, March in depth when that was happening. And, it was in February, I believe, that Trump started talking about auditing Fort Knox, or maybe it was January, but it was only for about 2 or 3 weeks, and then they stopped. And these huge spikes in imports of gold into the United States happened, and it's not just Switzerland. Switzerland is the red part, but look at how big the blue bars are as well. We just suddenly turned into this huge importer of gold for those 4 months. Now, I read some articles saying that blaming this on Trump's talk of tariffs, that they wanted to front run the tariffs. I don't think that was it at all. I think this is ending all of the rehypothecation of central bank gold and replacing what was actually missing because it was leased out. So they're unwinding leases, they're restocking Fort Knox, and an audit will be on the table in the future of Fort Knox. That probably will end up happening eventually, but they had to stop mentioning it. Who knows? But the stuff was probably missing because we do know that central banks lease gold. That is a fact. Okay.
Yeah, exactly. So the one takeaway here, I mean, aside from the whole Switzerland business and the 39% tariff, to your point, Mike, there was a long-term trend here of maybe 20 or 30 tons imported per month. And then all of a sudden it went over 350. I mean, like an order of magnitude, 10 times as much. So I do think that the U.S. is getting ready for a new monetary system. I don't know if we're ever going to get a real audit of Fort Knox and the other facilities. If we do, it'll be a fake one again, like in the 70s, in my opinion.
Yeah, a photo op. Okay.
Yeah, exactly. So let me just zoom in here on the January bar because it is pretty significant. So in January of 2025, Switzerland was over 220 tons out of a total of 373. That's about 59%. So in that particular month, January of this year, Switzerland imported 59% of the gold that the U.S. got that month. So a big player in those months. But as you can see, winding down lately. So significant there. And I did pull up this, Mike, because I know you wanted to point out the difference between unwrought gold and gold coins and so forth, and the various flows in and out of Switzerland. I'll
go back to your last chart for a second that mentions all the countries. And some of the countries, like Australia, gold producer, they also produce the Perth Mint coins as well, though. Canada, gold producer, they also produce the Canadian maple leaves. Hong Kong, not a gold producer. I don't know if there's any refineries there or not. Mexico, gold producer. Singapore, not. South Africa, producer. When you look at some of these months, you see an awful lot that comes from Canada and other gold producing countries. And I think that this total also includes ore, basically, the unwrought gold. So you're talking about doré bars that are, they're not even 98% purity. They're far lower. So move on to the next ones. And this is going by year. And this is Swiss gold imports divided by imports/exports with the United States. And so the imports to the United States and the imports from Switzerland, from the United States to Switzerland is on the top. Exports from Switzerland to the United States on the bottom, the middle, I mean. And then the net is on the bottom. And, if we are, the blue on the top is almost all unwrought gold. So what's going from the United States into Switzerland is mostly ore, or it is bars that don't meet certain requirements on the exchanges that have to be melted and recast. And that's one of Switzerland's main jobs as a gold hub. Yeah. So when you look at those other charts, there is a lot of gold coming from countries that actually mine gold, and it's passing through the United States on its way to Switzerland.
Yeah,
I believe.
I think you're correct too. I certainly don't have any evidence to the contrary, and that jives with my understanding of it as well. So, yeah. So, okay. By the way, a lot of those charts, or pretty much all those charts, come from Gold Charts R Us. And this website is made by Nick Laird. He does a phenomenal job. And for the next couple weeks, he said he's opening it up for free. So ordinarily, you need a paid subscription to view a lot of those charts. But he said that he's opening it up for free for the next few weeks. And if you go to this URL right here, you can access all those charts and more using these tabs across the top.
Yeah, so goldchartsrs.com/gold/charts.php.
Yeah, and I think you do have to type all that out because I tried accessing it just from the normal homepage and I couldn't get there. But when I typed out the full URL, I could. So hopefully that works for you guys.
Yeah.
All right. So moving right along here, there was an article in the Financial Times. The U.S. hits 1 kilo gold bars with tariffs in blow to refining hub Switzerland. And there was one chart from this article that I wanted to share with you guys. Gold futures hit all-time high in New York. And you can see here the divergence in price this year between the futures price and spot gold. It's widening to an unprecedented level. Like normally it's very, very tight throughout the whole year. And here it's widening by over $100 per troy ounce.
Wow. So, this is really upsetting the monetary apple cart. Okay, go ahead.
It's a good way to put it. The monetary apple cart. I love it. From Make Gold Great, silver and gold shorts chaos. Shorts will have to rush to cover before the 39% tariffs bite. Well, this is one way to revalue gold. Mm-hmm.
Yeah, it's one way to destabilize things too. We don't know what can be the final straw that breaks the camel's back. But, watch the Big Short movie again because something happens. It's just like one thing that finally pushes it over the edge. And we've had all of this disruption of the global economy with tariffs going up and then down and changing day to day. So, okay,
Yeah.
What's
And
next?
the one thing I'll say about this before we move on, keep in mind when you hear the phrase revalue gold, and I know Mike, you and I use that phrase as well. You really can't do anything to gold because gold is kind of untouchable. All you can do is devalue your own currency. So you can just devalue the dollar faster or by a greater quantity. So yeah, you can devalue the dollar as quickly as you want. So that's really what's at stake here. So anyways, what is going on at the White House? Well, I went to the website here and found the actual press release of the tariff. This came out the last day of July. So for the past week, there's been uncertainty on would this 39% tariff on Switzerland apply to these particular gold bars or not, because all these different gold products fall under a different category. And so there was kind of confusion there. And if you dig in a little bit further, you find that, yes, Switzerland has a 39% tariff and so on, except for products described in headings, blah, 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 and except for headings, blah, 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 blah. So you can look up what all these codes are. You can just Google them. It's actually pretty easy to see. I don't want to get into the weeds on any of that. The point is different gold bars fall under different categories. And so the president of Switzerland actually went to negotiate with Trump and try to get clarity. And I mean, obviously I wasn't there, but I think Trump's just like, no, get out of here. Something like that. So I think he just wasn't having any of it. And so CBP, Customs Border Protection, basically came out and said, yes, those two types of gold bars do fall under this 39% tariff jurisdiction. So that's the news we got on Thursday. So that's how this all came about. And so obviously markets are volatile, they're crazy. And then the Wall Street Journal publishes something Friday afternoon saying the White House will clarify the gold tariffs. So maybe not. Maybe we're not going to have 39%. In that article, President Trump will soon issue an executive order. Another one. We've got 10,000 executive orders clarifying which tariffs apply to imports of gold bars. A White House official said after CBP found them to be eligible for the high levies. Blah, blah, blah. Let me jump to the bottom paragraph. The president intends to issue an executive order in the near future clarifying misinformation about the tariffing of gold bars and other specialty products. So, Mike, I don't know. It might be a 39-0. 39.
This is just absolutely insane. Yeah, it'll be like 39-0. It'll go back to zero most likely. So this whole week ramping up to this and this spike, there's probably no reason for it. I can't imagine putting a 39% tariff on companies that are the gold is just passing through, basically. And those refineries have a profit margin of like 0.5% or less. It's just they can't absorb 39%, which means that either gold has to spike by 39% suddenly here in the U.S. At least you can't have Swiss gold be different than everybody else's gold. This is just really tough to figure out, and this kind of back and forth. I keep on wondering, where is Congress in all of this? Why aren't they even commenting on all of these executive orders? In 1930, the Smoot-Hawley tariffs were one of the things that helped to take a recession and turn it into the Great Depression. It was passed by Congress, but this was, going back and forth and arguing and presenting different ideas and so on. And Congress did pass these tariffs that really slowed down the world economy and and we're doing this though. The bubble had already popped in 1929, and the tariffs came in 1930. The markets were on the way down. They weren't super overvalued. And this is all happening, this on again, off again. And now we're going to get a clarification sometime soon, don't exactly know when, that could really affect the global economy. And okay, there we are.
Speaking of bubbles and speaking of volatility and how dangerous everything is, look at this, the everything bubble. This is absolutely massive compared to the bubbles of the past. Oof, not looking good.
And so now we're playing with an item that is traded on exchanges. It's a direct financial product, and it affects the markets, and there's knock-on effects, and there's leverage in all of these things. You mentioned in one tab the shadow leverage in the shadow banking system. This is the type of stuff that can cause another global financial crisis. And if it does, the people that don't have gold and silver are the ones that are going to get hurt, and the people that do have gold and silver are going to be benefiting tremendously.
Absolutely. I couldn't agree more. To sum it up, please don't mess with our price suppression scam.
Excellent. Okay. I want to thank you, Alan, for this, and thanks everybody for watching.
Invest and earn up to $2,000 in bonus silver at goldsilver.com. It's easy. Step 1. Open any gold-silver storage account excluding IRAs. Step 2. Purchase your precious metals. Step 3. Get up to $2,000 in bonus silver dropped straight into your vault. Visit goldsilver.com/free silver to claim your silver.